Which forever stocks are you planning to add in your investment portfolio this 2023? Dividends are payments made by a corporation to its stockholders in order to share earnings. They are paid on a regular basis and are one of the ways investors profit from stock investments. However, not all equities pay dividends. If you wish to invest in dividends, you should look for dividend stocks, which you may have heard mentioned recently in the news. This is because dividend stocks help protect investors in today's high inflation climate. Companies that raise their dividend payments year after year are less volatile than the market as a whole. Some corporations respond to inflation by increasing dividend distributions. Furthermore, dividend income might help smooth out a stock's total performance. Be wise and be a critical thinker. Here's the 8 forever dividend stocks you should check out. Dividend stocks are considered long-term investments. Even the most stable dividend stocks can see tremendous volatility in a short period of time. There are simply too many market dynamics that might cause them to rise or fall over the course of a few days or weeks, many of which have nothing to do with the underlying business. Do not be too worried by the day-to-day price changes. Instead, look for companies with solid operations, consistent income streams, and ideally, strong dividend track histories. The long term will look for itself. Let's start this with number 8 on our list. Number 8. Blackstone Incorporated, ticker BX. Blackstone is one of the world's largest investment corporations. In many ways, it operates similarly to a private equity fund, in addition to offering asset management services to clients, where it merely maintains a portfolio of stocks and bonds for high net worth individuals. BX also puts money into real estate credit opportunities and other hedge fund-like techniques. This $100 billion corporation touches practically every aspect of the financial sector. Dividends are variable because profits and cash flow are dependent on performance, but they are always considerable. The last 4 payouts annualized to yield nearly 4 times that of the normal S&P 500 stock. Number 7. AT&T Incorporated, ticker T. AT&T is a stock with lasting strength, having grown its dividend for the last 36 years in a row. This established telecom has recently optimized its process as well, spinning off its investment in Warner Bros. Discovery Incorporated in order to reduce debt and focus on its primary business of telecommunications. Shares are virtually flat on the year, but have risen around 35% from their October lows, indicating that Wall Street is pleased with what it sees as we enter the new year. This is the type of income investment you want to buy and hold forever as a typical risk-off stock with a big yield and lasting power. Number 6. McDonald's Corporation, ticker MCD. McDonald's Corporation outperformed expectations in the third quarter, propelling the company's stock upward. Global comparable sales increased by 9.5%, exceeding the average projection of 5.8%. According to value analysts, a compound annual revenue growth rate of 6.2% may be predicted from McDonald's Corporation over the next 5 years, which is much greater than the company's 3-year historical compound annual growth rate of 3.4%. The company's long-term goal of becoming 95% franchised will also help it avoid inflationary pressures in most operational concerns. In the second quarter, Bridgewater Associates was the largest shareholder in McDonald's Corporation, owning 2.1 million shares, valued around $511.4 million. With a combined holding worth of $2.7 billion, 58 funds were long the stock. ExxonMobil Corporation, Chevron Corporation, and AbbVie Incorporated are among the most dependable dividend stocks in the market today. McDonald's dividend yielded 2.23% in November 2022. Number 5. Colgate-Palmolive Company, ticker COL. Another consumer staples firm on our list is Colgate-Palmolive Company, which operates in the dental, personal and home care, and pet nutrition divisions. The company sells toothpaste, mouthwash, bar and liquid hand soaps, and other items. As of October 17th, Steve Powers of Deutsche Bank in New York City has a buy rating on shares on Colgate-Palmolive Company. The analyst also set a price target of $85 on the stock. Colgate-Palmolive Company is one of the most dependable dividend companies in the market today, having raised its yield for the previous 59 years in a row, and is expected to do so again in October 2022. Third Point investors acquired a huge position in Colgate-Palmolive Company in October, arguing that the company is defensive and has significant pricing power in inflationary conditions. It also has very profitable industries such as Hillspet, Nutrition and Business Hills has increased its organic revenue by 11 to 12%. The company's dividend yield as of November 2022 has been 2.55% during the last few years. Number 4. PepsiCo Incorporated, ticker PEP. PepsiCo Incorporated is a global consumer staples company that develops and sells beverages and processed foods. The corporation is headquartered in Purchase, New York, under trademarks such as Pepsi and Quaker Foods. It sells dips, cheese-flavored snacks, and soft beverages. Lauren Lieberman of Barclays reiterated an overweight recommendation on PepsiCo Incorporated shares on October 14th. In addition, the analyst boosted her price estimate for the company from $183 to $185. For the past 50 years, the company has continuously increased its dividend, with a 5-year dividend growth rate of 7.39%. PepsiCo Incorporated also announced in October that it is increasing its earnings per share and revenue expectations for the year by 2% each. In addition, the expectation for organic sales growth has been increased to 12% from 10% previously. Analysts anticipate 7.3% annualized EPS growth for PepsiCo Incorporated over the next 3 to 5 years, based on the company's amazingly consistent EPS growth in recent years. It also benefits from its position in the protective consumer staples industry. Over the last year, the Consumer Staples Select Sector SPDR ETF has returned negative 1.47% compared to negative 16.5% for the S&P 500. PepsiCo Incorporated is the CTF's second largest holding. In the second quarter, PepsiCo Incorporated was discovered among the 13F holdings of 62 hedge funds, up from 60 the previous quarter. Their entire stake values were $4.9 billion and $4.6 billion, respectively. PepsiCo's dividend yield was 2.53% in November 2022. Number 3. Merck & Company Incorporated, ticker MRK. Merck & Firm Incorporated is a global healthcare and pharmaceutical company. It provides pharmaceutical solutions for human and animal health. The company will be based in Kenilworth, New Jersey in October 2022. Terence Flynn of Morgan Stanley reiterated an equal weight rating on Merck & Company Incorporated shares and boosted the stock's price target from $91 to $100. Merck & Company Incorporated has increased its yield without interruption for the previous 11 years and has a 5-year dividend growth rate of 9.01% at the start of 2022. The corporation provided a solid forecast for 2022, predicting sales of $56.8 billion and earnings of $7.20 per share. Merck & Company sees its full-year sales between $58.5 billion and $59 billion. Merck's dividend yield as of November 2022 was 2.73%. Number 2. Chevron Corporation, ticker CVX. Chevron Corporation is a multinational energy corporation that operates in the conventional energy sector around the world. The headquarters of the corporation are in San Ramon, California. As of October 31st, Charles Rajaya, an analyst at Cohen, has an outperform rating on Chevron Corporation shares. In addition, the analyst boosted his price estimate for the company from $160 to $185. Chevron Corporation's dividend growth history demonstrates regular dividend increases over the last 34 years, as well as a 5-year dividend growth rate of 5.33%. The company has outperformed the S&P 500, with its shares up 121.5% this year compared to the S&P 500's 19.2% increase. In total, 53 hedge funds were long Chevron Corporation in the second quarter, and their total stake values were $27.9 billion and $6.5 billion, respectively. Chevron's dividend yield was 3.14% in November 2022. Number 1. Pfizer Incorporated, ticker PFE. Pfizer Incorporated is a healthcare and pharmaceutical firm that sells biopharmaceutical medicines all over the world. The company is situated in New York City. Pfizer Incorporated is rated market perform by SVB Securities analyst David Risinger, with a price target of $48. For the previous 12 years, the company has continuously increased its dividend yield, making it a dependable dividend investment in the healthcare industry. Pfizer Incorporated recently increased its 2022 earnings projection to $34 billion, a $2 billion increase from the previous amount. It has also raised its sales and adjusted EPS projection to $99.5 billion to $102 billion, up from $99.6 billion before. Pfizer Incorporated was found among the 13F holdings of 79 hedge funds in the second quarter and 83 hedge funds in the previous quarter. Their total stake values were $4.1 billion and $5.1 billion respectively. Pfizer's dividend yield as of November 2022 was 3.44%. Many fast-growing corporations have not paid dividends in recent years. Their rapidly rising stock prices provide all of the incentives that their investors expect. Other companies are referred to as dividend aristocrats, as they always pay dividends and tend to increase their dividend payments over time. Did you find this video helpful and informative? Please let us know in the comment section below. Please support us by showing your appreciation for this video and give us a big thumbs up, and subscribe to our channel. If you want to be notified when we release a new video, click on the notification bell to be up to date on everything related to crypto and finance. That is it for today's video. This has been Diversified Streams. Thanks for tuning in, and see you in our next video.